Hi everyone and welcome back to Grumpy Monkey Trading. My name is Michael. On the show today is another BananaRama round where we take a look at Cramer's Mad Money Lightning Round stocks and we do some charting analysis and try and find some interesting thoughts and conclusions about those stocks. I hope you've had a good week. I've had a great week. It's getting busy with the holidays though, and certainly was busy today. I am, though, in a good mood as fantasy football playoffs are now decided, and I am playing in 3 leagues and going to 3 finals next week, so I am pretty happy about that. Because of that, I didn't get as much time to do show prep today, so we're going to take a little bit of a reduced number of stocks and fewer slides as well, but it should still be good. This is also going to be my last show of the year. I'm going to take the next 2 weeks off for holidays, but I'm also going to be improving the show so that next year we can have even more fun. So stay tuned. There should be a message, Christmas or holiday message link that you can get to that little talk on what sort of things I'm going to improve upon. First of all, thank you for all your support, I should say, through this year so far. It's been a fun ride, and I'm really looking forward to next year. So with that, let's get started with the show. All right, so the first of our night is Wynn, W-Y-N-N. Kramer says, I love Steve Wynn. I love what he has built, but MGM has got that balance sheet between Macau and Vegas that I need, so MGM is the play for me. Well, he didn't necessarily poo-poo at Wynn, so let's take a look at the stock chart. At the moment, though, Wynn is in a massive down cycle, in a large descending triangle, which could turn even worse on this weekly chart if we break through this bottom barrier, which tends to be what happens with descending triangles. As you can see, I've sort of marked out the start of a parabolic pattern, so you can see how it's following down here. If it breaks that barrier and holds, then it's going to start the next line of that parabolic trend. So we would start here and start working our way down. So that's a critical juncture. Let's take a look at it on the daily. And here you can see that we're really heading towards a decision point. We're in this symmetrical triangle where we're basically having higher lows and lower highs, and we're starting to reach the crux of that. So if we're to rebound and start to engage in a new positive trend, then that is going to happen by breaking out of this upper resistance line. If we fall below that lower support line and hold it, though, for an extended period of time on volume, then we could be starting the next leg down for Wynn. That would be a good opportunity to short it. But at the moment, we're just sort of waiting between about the 63 level and the 73 level for it to make a decision, which could come at the next earnings. Key Corp, Key, Kramer says, I think Key is really terrific. I still think Key is great. If you think that the Fed is going to raise rates like I do, so this was last week, that's a good one to be in. So Feds did raise the rates, but very small, and Key took a bit of a header. Now, I'm rating this stock because a viewer actually sent me a message and said that he really likes the show and wanted me to take a look at Key. So this is for you, buddy, because overall the chart isn't really that exciting. I don't have a lot to say. We're in this long-term symmetrical pattern. This is a couple of years chart. I had to go back to kind of refine it. We have popped through it once, but then we came within 4 or 5 months right back into it, and now we're still in that channel. So we're going to hit another decision point. Obviously, the Fed is moving the needle a little bit, but let's take a look at the daily, and you can really see what that means. It means nothing too good. As you can see, we had huge bearish engulfing candles on a ton of volume, particularly on Friday when really the news kind of got firmed up. So what we're looking at is a support line here. If it breaks through, then this is going to be a bearish opportunity because it's really taken a dive. And it still has a long way to go. If you look at the stochastics, for example, it's not plunging and oversold due for a turnaround, or the RSI, it is in transition into a bearish pattern. So it may hold this line, it may not. If it does, then it's going to go bearish. Certainly, sir, if you were looking at it from the opportunity for a buy, then I would certainly wait a little while for this to get sorted out. Ford F. Kramer says, it's still got a lot in Latin America, and I don't like that. I also see that auto sales are going to be peaking in this country, and don't like that either. So he can't recommend forward. Looking at the chart though, everything's themes pretty stable. So if you're in it, I wouldn't be terribly worried. You are collecting a nice dividend. But if you're looking for a big boost, I don't see that either. Basically, what we have is a very light wedge pattern, a descending wedge pattern, but you could almost call it symmetrical. It's very close. We are resting on this lower support line. We wouldn't want to go through that, certainly. But aside from that, we have basically a steady, slow progression downwards. So if auto sales do improve, counter to what Cramer says, then there's opportunities here. If not, though, then certainly it is a concerning bit, and we are at the lower end of the last couple of years, so that's never good either. So overall, just a sort of meh. Groupon, GRPN. Cramer says, I think it's still too early to buy Groupon, and I would tend to agree with him. It is in a long-term bearish pattern, as we can see here. We've marked out our descending parabolic trend line, so we have this one, and then we start by building this one, and we're pressed up right against it. If it were to cruise through that line, that would be a very positive sign that you would indicate that might be a trend reversal. I don't really expect that. I think it's going to continue this bearish wedge pattern because if you look sort of from this sequence down, that is not 5 waves of good times if you follow Elliott wave theory. So I think it's probably more likely to challenge down to the 2.5 region and then probably consider maybe breaking out. But Groupon as a whole, I mean, when you look at that business, there are so many other websites that do exactly the same thing. They are all selling the same deals to each other. So really, what edge does Groupon have over anyone else? Thus, bearish. ConocoPhillips, COP. Cramer says, they say the dividend is safe. The problem is that it's often out of control, as we learned with Kinder Morgan. I know that the rating agencies want to downgrade these guys repeatedly. I'm not a fan of ConocoPhillips. It doesn't seem like anyone else is, as it's been headed a long-term downtrend. Obviously, oil is impacting that, and natural gas. Those prices are hammered. Demand is uncertain. And the exposure to ConocoPhillips to those industries is huge, so obviously bearish. We are now headed towards this support line of 42.5, long-term downwards wedge pattern. So concerning overall, eventually those tend to break positive, but with oil, who knows how long. There is a nice 6.44% yield on a dividend, and if they do say that that's sacrosanct, then that's a valuable commodity. But I would certainly wait to get into it for a better price, particularly till we learn a little bit more about what OPEC's going to do. ORCL, ORCL. Cramer says, I think Oracle is fine. I was looking at their ad today with fast enterprise software. I happen to be more partial to Salesforce, but Oracle is a well-run company that will do okay over time. I do prefer CRM and Accenture too, by the way. Not they're necessarily linked. So he just sort of meandered around and just said Oracle is okay. When I look at Oracle's chart, though, I think there's a lot of concerning elements to it. For one, it's headed in a downward trend, so we have a bearish pattern here with some heavy volume headed towards. So at the very least, I think we're going to challenge this lower support level, which is here defined by multiple peaks across. If it breaks through that, that's going to be a long-term downwards trend. That's going to be concerning. The other part is if it holds it for a little while anyway, look at what we have here. You can't really see it through my head, but there's a shoulder, another head, and possibly another shoulder being formed, which would be a head and shoulders pattern and a longwards downward trend. So I would be very concerned about Oracle over the long term because there's a lot of red flags being waved on the chart. Hertz, HTZ. Cramer says, no. That industry is absolutely troubled and that company is absolutely troubled. I'm not going there. And looking at the chart, you would say there's no real reason to go there either. Long-term, bearish, wedge pattern, still ongoing. If we were to look for a silver lining, though, we would say that we are at the lower support level, which generally could result in some sort of bounce. We have a RSI that is hitting a support level as well. We have stochastics that are underneath the oversold boundary, but also kind of hooked underneath, which I tend to like. We have a CCI, which is in oversold territory, but recovering, which tends to be a bit of a positive sign. So I would say on this weekly chart that we are due for some sort of small bump. Obviously, the market took a big hit last week, so perhaps that can, perhaps there'll be a recovery next week, or this week, I should say. So because of that, there could be a positive bump. But long term, it's a long-term pain. Long term. All right, that's the show for this week and the rest of the year. So if I don't see you again, which I won't, have a great rest of your 2015 holidays and a happy new year. And I look forward to seeing you again in 2016. Please subscribe, please like, please share, please message me. Thank you again for your patronage. This has been a fun ride. If you'd like to hear me talk about the ride so far, please click the other link to the other little message for me and the rest of the year. Otherwise, please drive safe, get a designated driver, and I hope you have a great holiday season, and I'll see you again in the next year. So, bye.